Hi, welcome everyone. My name is Paul Spillane and I'm the founder of the Exclusive 10%. Now, just a couple of points before I start. I've had to use a recording for this webinar. I've tried live quite a few times. However, there is so much useful information you will want to make notes, and that is not possible if it is live, as many participants have mentioned. So if you need to, you can press pause and make notes. The other reason, there is much information to absorb and I do not want to miss anything out. If you are currently a successful investor or still developing your skills, you are going to get so much out of the next few minutes, as I'm going to share with you some exclusive tips about investing and risk management. This will be time well spent. So we have limited time, so let's jump straight in. The most frequent and obvious question I get asked is, how do I make money from the stock market? Now, the answer is actually not complex. I explain that making money from the stock market is a two-stage process. Stage one is a choice of investment. This stage is the element most investors concentrate on and, of course, is important. Stage two, which is shamefully ignored, is risk management, which virtually nobody concentrates on. Now, I know it's not sexy or exciting. However, it's a potential game changer you could be looking for, as I will demonstrate shortly. Here is a fact that will astound you. The majority of your stock market investment failures, more importantly, the damaging losses, are not created through poor choice of investment, but poor risk management and choice of exit point. The same reasoning applies to taking profits too early. So let me repeat that again, because it is so important. The vast majority of your stock market investment failures, more importantly, the most damaging losses, are not created through poor choice of investment, but poor risk management and choice of exit point. The same reasoning applies to taking profits too early. Now, always managing your risk is imperative for both increased profits and reduced losses. The challenge of making money from investing in stocks is an achievement in which you will ultimately succeed if you master risk management. Investors are prone to selling the share at the wrong time for the wrong reason. There is a habit afflicting investors to hold losers too long and sell winners far too quickly. It is as certain as night follows day. I'll never forget the first time I suffered a big loss investing. It was horrific. The negative feeling stayed with me for such a long time. I can still recall today the gut-wrenching pain of that loss. However, I did not lose money through a bad choice of company. I lost money through poor risk management, although I did not know this at the time. If you manage to use an effective risk management strategy, you can eliminate these bad habits of selling at the wrong time. It will be a game changer for you, like it was for me, as you're about to find out. Now, the good news is that these skills, and they are skills required to instigate an effective risk management strategy, can be learned and implemented very quickly. You can implement this process on investments you already hold. So once you've learned and implemented these new skills, emotions and the lack of knowledge, which are the two biggest hurdles investors face, are no longer a significant problem. Now, the main reason for selling the share for profit or loss is difficult to get consistently correct is the skill of effective risk management is seldom taught, and you do not have easy access to discover an effective strategy, at least until today. So, to be a little direct, investors are led to believe they may have some risk management, however, it tends to be ill-conceived. Yet effective risk management is absolutely key to your successful investing. If you want evidence, look at the most successful investors and traders that ever lived, like Warren Buffett, Charlie Munger, Peter Lynch, Paul Tudor Jones. The list is an extraordinarily long one. All, and I mean all, had effective risk management and knew when to sell for a profit and loss. They start with risk management. It is not an afterthought, it's their first thought. And now it's your turn. So, as an independent, then being hired as a professional, which we will discuss in a few moments, and returning to being independent, I have seen all sides of the industry and gathered knowledge and experience from each facet. And I've returned to be an independent again because I greatly admire independent investors. I like the conversations we have. I like the money making attitude we share. I love spending time in your company. You interest me greatly. I love talking stocks and shares, strategies, trends, the little subtle changes to be made to improve your results. I enjoy passing my knowledge on and helping you be better. I especially love it when you implement the risk management strategy I teach and you tell me about your successes. Now, those conversations always remain private, always remain private. So I choose to be an independent 100% of the time. I'm one of you, always have been, always will be. I understand your thinking, your time constraints, lack of access to information on risk management. I also know what a huge advantage it is to be an independent and not a professional. If you take advantage of the edge you have, I know what it takes to be a successful independent investor. I've done it. There's virtually nobody who has walked my walk or understands you like I do. If you implemented an effective risk management strategy with no more big losses and increased profits, what effect would that have on your long-term future wealth? And regrettably, risk management is avoided by virtually every investment coach as they deem it too difficult to explain in simple terms to independent investors like you. To explain something complex in simple terms, you have to have a complete understanding of the subject. Only when you have this depth of knowledge can you explain it in terms that most people understand. I'm a great believer of keeping it simple, which is a real skill many do not possess. I do, as you will discover. And as I stated previously, risk management is not exactly sexy or exciting. However, you will find owning your dream cars exciting, staying in the best resorts in the world on holiday exciting, where you live in your dream house is exciting, doing what you do for your loved ones is exciting, and having the freedom to do what you choose is incredibly exciting. Doing the boring allows you to do the exciting. Some investors currently use a set percentage or amount of their investment or portfolio value as their exit point, which is a generic number and has zero bearing on the share you have invested in, your risk profile, or any other consideration. It's just an often repeated, random, and ineffective method used as investors do not know there is an alternative, which is much more bespoke to you and your investment. And I will explain shortly exactly why you are given this generic number for your exit point and immensely powerful reasons you should avoid it like the plague. If this is your current risk management or you do not have any at all, then keep tuned. This is for you. So, who am I? Why should you listen to me? So, as I said, my name is Paul Spillane. I'm the author of a book, 12 Positive Changes to Transform Your Stock Market Fortunes. I'm a coach and a mentor. I started investing like you at my kitchen table and a desk at home, looking to earn a little extra to improve life. I've now invested for over 30 years. Like most, at the start, I was best described as a novice investor. I lost money a fair few times, but I did realize quite early I did not know enough. However, I continued to absorb knowledge and slowly turned it around. I learned some extremely valuable and profitable lessons by listening to experts. My transformation came when I realized the investment choice and effective risk management was absolutely key to investment success. Having effective risk management was the absolute game changer for me. It cured many problems, took those awful emotions out of the equation, and uncertainty became a previous issue. When I understood how imperative risk management was, I studied what I could and learned and developed an effective process which forms the basis, with some very minor alterations over the years, of what I now use and teach. So these additional changes, like a wake-up call, transformed me so much I became very proficient as an independent investor. In fact, I became so accomplished, I was hired to be a professional by a multinational to invest their clients' money with great success. Obviously, I had to pass the exams to be a fully qualified and regulated stockbroker. Not easy, but I managed to succeed in just 5 months. I worked for the multinational for a few years. I then formed my own successful firm and eventually had 4 regional offices. I then received an offer from a FTSE 100 company for my firm. I couldn't refuse, so I did not refuse and I eventually sold. Using effective risk management was a game changer for me and what you have been looking for. Now, during my time, I've seen bull markets, bear markets, bubbles, crashes, recessions, boom periods, and anything else you can think of. It's been quite a journey. Now, during the financial crisis, I implemented my risk management to great effect for my clients. To keep a very long and very complex story short, my clients did not suffer much compared to most investors around the world. I sold incredibly early and avoided the worst of the turmoil, thanks to my risk management process. It saved my clients millions, and I mean millions. The head of the multinational firm picked my brains on my process at a lunch. The head honcho asking me. It's mind-blowing. My risk management strategy has been evaluated repeatedly in all markets. It works well. My process has faced scrutiny from clients, multinational firms, regulators, and peers. It passes every time. I mentioned earlier, I would go into a little more depth into the generic percentage number used for stop losses and why you should avoid this strategy like the plague. And my risk management strategy is more suited to individual shares and creates bespoke exit points for profit and loss. Every share is different. This is easily the most effective strategy to use. Not one size fits all, but bespoke to each of your individual shares. Does it sound like a lot of work? It doesn't take long at all. And I mean that, it really doesn't take very long at all. It's also designed to help during the biggest price moves, up or down, where the serious money is made and lost. This is where it excels, where it's the most effective, where it's the most needed. Investing is a game of probabilities, not actuals, although some probabilities are more likely than others, as a risk management program will emphasize. One strategy commonly taught is to use a set percentage or amount of your portfolio or investment value as your exit placement. I.e., if you invest 10k, then you risk 1k. If you invest 17k, then you risk 1.7k. The numbers are for demonstration purposes only. If the same message is repeated and enough investors stroke traders follow this instruction, this creates liquidity for the institutions, as there will be many shares to transact at a particular price zone. The same applies to support resistance lines on charts. However, for this demo, we will concentrate on the generic percentage only. Remember, what becomes profitable for some can be a loss for others, including you. When there is a collection of sellers at a particular area of exit, the experienced buyers will be awaiting the sale of these shares to purchase the stock at a discounted price and with the available liquidity. So the buyers win the game. The institutions and experienced know where your exit point is, as it is the same for the majority, and they take your money. The loss you make, the money you have gifted for free, is their future profit. It should be your money. And unfortunately, many independent investors place the exit point in the same place every time. You are giving your money away if you follow this strategy. You get stopped out when you do not need to be. This is why the institutions call the independent investors dumb money. The point of investing is to make money, not give it away. It's better in your pocket. And my risk management strategy is bespoken to each share. It is amazingly effective at preventing the herd mentality exit point placement. Here is an example. Now, this is a real example of one of my previous investments. So we have what could be considered quite a clean chart for this stock. The trend is obviously on an upward trajectory. However, there are a few gaps, which are sudden price movements, and the volatility is quite high. So a little more difficult to navigate than a normal stock. It's a good company and in a growing sector. And for clarity, I have invested previously in this share. On this occasion, when I initially purchased the share, realized that the stock might be one I might buy and sell a few times, so buy and hold is not really a strong option. I have a process in place to manage this effectively. It is the same process I will teach you. I am comfortable making money this way. I have highlighted an area of interest for traders, especially those who follow technical analysis, and there is a strong indicator, which is an ascending triangle, which traders would be excited about. Investor trader interest could result in increased volume and volatility. That's why I mention it. So I've highlighted the entry point, which my process of entry has indicated. Yours may differ. We all have our own methods. If you notice the red line indicating where the traditional generic percentage number would tell you to place your stop loss. As you can see, the share short term has performed well, about a 17% increase for me in just a few days, which is a good result. Unfortunately, as can happen occasionally, there is an event which is unexpected with the company, which causes a reverse in the share price. Now, two lessons here. The first one, this is why investing is based on probability, not actual. Events that are not predictable can occur without notice. Not often, however, can happen. The course guides you through these. You will know what to do. Second, good companies can have a short-term difficult period resulting in a declining share price. Effective risk management becomes your savior. Also accept an opportunity may be present. More on this in example 2. As is often the case, sadly, those who follow the percentage advice are stopped out for a loss as the price of the share dips below your designated stop loss point. If you notice a large green candle just under the red line, that is the price buyers are taking your money from you. They know where the standard stop loss is placed by most investors. Green represents more buyers than sellers for that particular time period. We are now given a strong reason to sell, so we sell. The effective risk management has instigated a sale which results in a profit, although smaller than originally anticipated. However, it is a profit and not the loss most other investors suffered. Now, this was my actual transaction. Profit banked to be used for another day, not a loss, profit. Some of you will have thought that if it just held, then it still climbed eventually past my entry point, and that's fair enough. However, I have banked a profit firstly, and secondly, going back to the point of a good company having a bad time, I re-entered the stock at the same price I previously entered. I've made more profit selling and buying back than holding on. This happens a lot. It's much more profitable to sell and buy back than just to hold. And the fees, they're small and they're not relevant to the overall picture. So this example is avoiding a damaging loss. Now, when I invest into a share, I mostly purchase it with the intention to hold it long term. I will also buy shares if I see a strong probability to make a quick, decent profit, as a previous example illustrates clearly. I can make these transactions as I have effective risk management in place, which will get me out of trouble if it turns against me without much loss. However, long term is the aim. Now, the concept of long term has evolved over the years into a buy and hold no matter what. This is completely the wrong way to invest, as I will demonstrate, although understandable if you do not know too much about risk management. I will now give another example of risk management at its finest. A popular share and a well-known company were beginning to have issues after a long unprofitable rise in the company and share price. For the sake of this example, I'm going to keep it simple like the course. As the share price passes $700, the company announced a set of continuing negative circumstances for the company and therefore the shareholders going forward in respect of revenue, profits, customer numbers, and forward projections. The share price starts to reflect the growing negative sentiment and begins to descend. To many investors, the news is a little disturbing and surprising. This has been a popular share for quite the time, and with good reason. It's Netflix. An extraordinarily strong reason to sell, which you have confirmed, manifests around $640, highlighted by the risk management process. So you follow your process and you sell. No damaging losses for you today, but potential locked in excellent profits depending on where you invested. Now you could use this money to take advantage of other opportunities in the stock market. You will avoid the very damaging loss many are about to suffer because you sold and they held. The bad news just keeps flowing, unfortunately. This really is a prime example of a good company having a difficult period in their history, and how rapidly a share price can alter if the sentiment from investors reverses, proven in this example. On the emotional scale, you would be in the fear element. Do not forget, you have already sold and are avoiding the ongoing carnage. The bad news just keeps being released, sadly. For those that held on, as it always comes back, always does, this is just getting nasty and extremely expensive for them. The emotional impact and stress cannot be underestimated. This is a deeply unpleasant time for anyone holding. I'm relieved I do not have to go through situations like this again. So the price decline from high to low is a colossal 76%, from $700 to $162, or $538 per share. The last time the price was this low was summer 2017. Now, years of spectacular growth wiped out in just 6 months. The downturn is enormous, it's rapid, and for some investors, quite scary, as they feel trapped and do not know what to do. And I feel for them. I've been there previously, and it's a terrible situation, and more importantly, completely avoidable. And I show you how. And here's another very sobering thought. To recover from 162 back to $700, it is not a climb of 76%, the same as the fall, but a 333% increase, which I'm sure you realise. Now, one good habit to maintain is keep checking on shares you have sold previously, especially if you have used my risk management program. You never know what can happen. A strong reason to buy appears at approximately $250. Now, you have a choice of reinvesting or not. It's an additional benefit of selling at the right time. You have more opportunities to purchase a good company at a heavily discounted rate. Obviously, it does not happen every time, but enough for me to highlight to you what additional benefits and profits are occasionally available to you with effective risk management. So let's assume you took the opportunity to repurchase the stock at $250. Now, although not at the bottom price, as I discussed in the risk management program, I do not chase tops and bottoms of price moves ever. One of the biggest ego mistakes investors make, it's buy low, sell high strategy, not a buy lowest, sell highest strategy. You have repurchased a share at a discount of $390 a share. A huge discount. That's a hell of a discount, achieved whilst avoiding a huge loss most others suffered. Now, the share price may have never recovered. Many do not, as I said. It does not always come back. It's an utter myth. So the repurchase option may have never presented itself. However, you would have still saved a fortune by selling at the right time. Buy and hold can work, but not every time. You need to be prepared for unexpected large price swings, avoiding the damaging losses and farm potential opportunities for profits. Effective risk management will allow you to participate in more profitable investing, like the exclusive 10% that investors take advantage of. Effective risk management opens so many doors for you. And if you think that this example is a one-off, go and check many other major shares. It is an exceedingly long list. The best investors have effective, bespoke risk management. In the other examples, we have shown you why buy and hold is not always the most profitable strategy, and avoiding the big losses, no matter what the initial investment amount, is the way to success. Farming the additional opportunities when they occur can be an excellent bonus and very lucrative. The process works for all investors and investment amounts. Could be a few hundred, could be a few thousand, could be multi-millions. In this example, I'm going to show you about increasing the profits available to you from your investment and not taking the profits too early. Managing buy and hold correctly. You have seen how you can benefit from my process on the declines. It's time to maximize the juicy profits, which we're all aspiring to. It's why we're here, to make money. The example I give is Nvidia. So it's an extreme example, however, a perfect demonstration. In 2022, the stock market was in decline and we entered a bear market. My process is perfect for such events. Now, a down market follows an up market, always has, always will. With a risk management strategy, you will be prepared for any market. The bear market started to recover October 2022 and turned back to a bull market. So I will use round numbers and assume you have invested early 2023. You invest $5,000, however the process works for any amount as I mentioned earlier. $5,000 gets you 33 shares at approximately $150 each. Quite quickly, around 5 weeks, the share price shoots to $229, giving you a profit of $2,607, which is 52% on your initial investment, which is a spectacular return and very tempting to bank. However, just based on effective risk management only and not personal reasons, there is no reason to sell. The stock price now climbs to $315 in late May with no dramas. A very impressive rise. Your 33 shares are now worth $10,395 approximately. You've doubled your money and profit in 4.5 months by holding a little longer to approximately $5,395. Now please do not forget the profit and exit points work in unison with each other, so you are always protected from the big falls if the share price suddenly changes direction and plummets. If this occurs, you will lock in splendid profits with the effective risk management. Now it gets remarkably interesting. Another immensely powerful reason to buy manifests itself and gives you reassurance that you have made the right decision. When I said it gets interesting, here is the why. There's always a why. The price then climbs to $518. Your investment from $5,000 is now $17,000, more than triple in value in 9 months. Your profit is now running at $12,000. Remember, if you had taken the original profit after the first climb, your profit would have been $2,607, not $12,000. Which one do you want? However, the climb is more erratic than previously, and now it gets tricky to manage for a while. Now, the shares risen so much in such a short period of time, many investors, institutions, as well as traders will look to cash in. My process would have automatically sold at a bespoke price for this particular share. The profit you would have made is beyond exciting, and your safety net helps you protect most of those profits as the price falls back to $380. You would have sold at a much higher price than $380 with my process. Later in the chart, you will see another steep price climb. as an enormously powerful reason to buy again presents itself and another huge climb in price occurs. Now please bear in mind, these type of returns are rare and are not indicative of average returns. It is an extreme example, however, they do occur from time to time. I want to give you examples of how the process can be useful and works even with extreme price movements as well as normal price volatility, which is the first example. By managing the share in the correct way and letting the risk management strategy work for you, you added additional huge profits to your bank balance and avoided some serious losses. Most investors did not, about 90%, proving the risk management works well. I'm offering you a brand new opportunity not readily available elsewhere to master the skill of risk management. Now you will enhance what you already achieve and in turn you will become a more accomplished investor. You are learning what the elite investors, the exclusive 10%, have always known. You will discover what makes them successful. The process works side by side with your current research to find your investments and takes you to an elite level of investing. You will find increased opportunities to make money with very little additional work once you have learned the risk management. Now consider the following very carefully. It's extreme, I get it, but I am making a point which would be wise to think about. When's the last time you called the tax office wanting to pay more in tax? Have you ever willingly reduced your income so you could give it to someone who does not need it instead of spending it on your loved ones? Why are you quite literally giving your hard-earned money away by not utilizing an effective bespoke risk management strategy? You've worked hard for your money. You've made sacrifices to achieve your current status. Your mindset is good, that's why you're here. However, without the correct risk management, you are creating your own restrictions and limits. You have come too far to let it all go. The strategy is particularly designed so you keep your money and make more. Works in all markets. It is simple to understand and implement, no more than a couple of minutes. So you can implement the process quickly and effectively from day one once you understand it. You can invest knowing you will not face big losses. You can maximize the profits and invest with renewed confidence. You will be making life better for you and those important to you. So please book a call and we'll just have a friendly chat. It'll be a Zoom call, face to face, no more than 30 minutes. When you book a call, I will send you a small form to complete, which will give us some ideas about your investing progress so far. Please return this if you can 24 hours before the call. A completed form will help us and you greatly. Hope you've learned something today which was helpful and realize a two-stage investing process is much more profitable than just choosing the stock. And do not forget to book a call with me personally. Have a great day.